Hi everyone, welcome back to Invest with Rich. If you're new here, welcome to my channel where I teach busy working adults how to grow their money. So remember to like and subscribe because it does help us to create more videos as well. Okay, so I want to share with you guys what's happening in the market recently and also the top four stocks that I'm looking to buy in 2026. Okay, so without further ado, let me go straight into it. The first one is Microsoft. Okay, Microsoft is down 3% in the last 1 month. Okay, what's happening here is that Donald Trump said that Microsoft should reduce the power cost for all Americans. And because of this news, it created some effects in the stock as well. Okay, so to me, it's not a very big deal, okay, just because there's some noise in the market, because Microsoft's revenue has been doing very, very well, especially for their Azure business, okay, it's up 15% since last year. Okay, year on year is up 15%. And also they are also gaining more and more market share of the cloud business globally. Okay, now I think their market share is about 25%. Of course, to the biggest competitor, which is Amazon's AWS, okay, it's just being the second highest in terms of revenue and also in terms of market share. Okay, so to me, Microsoft recurring revenue business is still very, very strong with LinkedIn, with Microsoft Office 365, Windows as well, doing very, very well with the subscription business, which is one of their staples. And also, they are growing very, very steadily. Even with such a big company, such a big revenue, they are still growing very, very steadily. Okay, so that's why I think Microsoft will continue to grow. Okay, the second company is Meta, down close to 5% in the last 1 month. Okay, and actually, to be honest, Microsoft has been down pretty badly since November period. Okay, it's because of a lot of news which I will share later. Okay, and when I look at Meta's ad revenue, okay, it is still doing pretty great. Okay, at 25 to 26% ad revenue jump year on year. Okay, which is quite a lot. Okay, 25% to me is quite a lot, and for businesses that are on Facebook, Instagram, they are still very, very reliant on all these ads to actually bring them their revenue as well. Okay, so even as a business owner myself, I still rely a lot on Facebook and also Instagram. Okay, so to me, their ad revenue still remains the strongest. Okay, of course, they are not doing so well in the AI space. Okay, you can look at the market share over here, it's one of the smallest. Okay, so they're still struggling quite a lot with AI. Okay, that's why recently they actually started to build up more on the meta compute. Okay, this is something new that Meta has launched. Okay, and Mark Zuckerberg has actually sent two of his best people to actually lead this project. And that's why also they reduce 30% of their manpower for reality labs as well. Okay, so because of all this news coming out, and people are not um really positive because this meta compute looks like another money spending business, just like what happened in the metaverse business as well. So, and also coupled with one of the big tax bill from the Trump's one big beautiful bill. So all these things add together resulted in Meta stock really being down from the high about $800 now to $615. So to me, it's still very, very good businesses holding a lot of cash. So the question is, how are they going to use their cash? I think that's what I'm more concerned about. Okay, and the third one, which is one of my favorites recently, is actually Netflix. Netflix is down 5.59% in the last 1 month. And it has hit a very much one of the big lows, which is crossing down from the $100 mark. Okay, so the stock really plunged after their stock split back in 2025, okay, which really reminds me of Google when they did the stock split in 2022. Okay, after the split, Google did went down by quite a bit as well, and then it started recovering. And for me, Google is still 100% gain from I think for a stock, it's 100% gain. I think it's pretty good results. Okay, so because Netflix also missed their quarter 3 results, and also another big thing that is happening is because of this deal. Okay, this deal that has been on pause until further information. Okay, they are supposed to buy Warner Brothers Discovery for $83 billion. Okay, and because Trump is saying quite a couple of things about this deal, and also because Paramount has actually came in and they also want to offer a deal, because of that, it's actually being stuck. Okay, and Warner Bros. Is also another listed company. It has been going down for quite a long time. Okay, and why is it still that Netflix wants to buy this business that has been going down? There's a lot of intellectual property IP being tied to this business because there's so many business. Okay, I'll show you guys how many business they own. But the main problem with Warner Bros. Discovery is because of their debt. Okay, because previously when they actually spin off from AT&T, they also took on AT&T's heavy debt load as well. Okay, they brought in quite a number of debt. Okay, I think right now it also have 156 million worth of debt. Okay, at the start. Okay, now I have to check how much they owe, but it's all being passed down by AT&T. Okay, and because of that, they have been trying to repay their debt, even though their business was doing quite okay. But because of this heavy debt, it couldn't take it any further. Okay, so that's why Netflix cash injection will be so important for this business. Okay, and if you guys don't know, okay, Warner Bros. And Discovery, they own pretty much quite a number of businesses. Okay, the most noticeable one is actually, of course, HBO. Okay, also owning a lot of the businesses, CNN as well, Cinemax, Cartoon Network, Animal Planet. Okay, one of my favorite, TLC as well. Okay, so TBS also many businesses, they have great shows under them. So if let's say Netflix is able to buy over this business, okay, they will not have any problems with all the rights of this show. Okay, so that's why I think it's still a very attractive price for Netflix, but I do see that they might go down even lower. Okay, maybe into the $80 or even $70 range based on technical analysis. Okay, so another stock that I'm looking at as well is Visa and also MasterCard. Okay, Visa and MasterCard is quite similar. Okay, I do own some Visa. And recently, what happened is Donald Trump said that he wants to cap interest rate for credit cards to 10%. Now, this shouldn't affect Visa and MasterCard because they are intermediaries that facilitate all these transactions. Okay, which means you buy something through a credit card, then Visa and MasterCard does make a profit from those transactions. Okay, traditionally it won't, this interest rate thing won't affect because it only affect the banks. Okay, so but somehow people link it to Visa and MasterCard. That's why it took a tumble. Okay, but if we look at technical analysis wise, okay, let us have a little look at it. Okay, technical analysis wise, I don't think that it is a big issue for all these businesses. Okay, let me show you guys what I meant. Okay, so if you look at all these businesses, okay, it is down by quite a lot because of because of what I call the market noise. Okay, so even Visa, it is down by quite a lot since the all-time high. Okay, actually the all-time high is about 375. But to me, it's actually a very attractive price for entry. Okay, and if you look at the previous companies that I mentioned, they are all at a very attractive price right now. Okay, so remember to invest at your own due diligence. Okay, some ideas for you is also here. If you want to know more, please follow me and also let me know in the comments below what companies are you guys investing in. So I see you guys in the next episode. Bye.